Hey everyone, as an agent and realtor, it's my job to make sure that I do the best by you. And one of the ways that I can do that is by also helping you with the home loan process of purchasing. Now, I'm not a lender, but I did stay at a Holiday Inn Express last night, so be warned. The reality is there are plenty of ways to ensure that you're getting the best deal when buying a home. And one of those ways is making sure you have the best lender. So first and foremost, not all lenders are created equal. Some can actually save you more money than others. When you hear on the radio or on TV that interest rates are at 3.25, that doesn't necessarily mean that that's the interest rate that you would get. See, interest rates vary. They vary because of many different reasons. So I would think more of a range around 3.25 when you hear something like that on the radio. You got to think to yourself, well, it's not exactly the rate that I would get, because interest rates vary based on many things. I mean, they can vary on your down payment, your credit score, what kind of loan you're getting, how much of a loan you're getting, and many other things besides those as well. And surprisingly, some lenders can have better rates than other lenders. Which brings me to secret tip number 1. And this is my favorite. Lenders want your business. It is a competitive market and they will compete for it. Meaning that lenders have the ability to fluctuate and negotiate their rates down. So if a lender gives you a rate and you go to a different lender and say, what's your rate? And they give you their rate and their rate's better, you could probably go back to that first lender and say, hey, look, I may go with the other company if you can't fix your rate because their rate's lower than yours. A lot of times lenders are willing to match or beat the competition. And this back and forth negotiation where you can play one lender against the other can literally save you thousands and thousands of dollars. However, be careful and make sure you understand all of the rates and fees that are applying, because that brings us to our next tip, tip number 2. Stop. Okay, all right. That tip was huge, and because of that, we just saved you a bunch of money. And so I'm gonna go ahead and have to insist, for the love of lenders, give us a like. It's that little thumbs up below the title below there. You can do it. Go ahead. Okay, the next secret is if it's too good to be true, it probably is. Which seems contradictory to the first one about getting better rates. But here's the deal. I already said before that the lending world is a competitive one. So you have to make sure that you understand all of the rates and fees that are associated with your loan. Now, let's talk about closing costs. Closing costs are the costs that are associated with actually having to create and do the loan. Sometimes, and they can be substantial, in the thousands. So I've heard sometimes lenders claim to have no closing costs. Let me tell you this, no loan has no closing costs. There are always closing costs associated with getting a loan. What they typically do is they'll just roll those costs into the loan by making the interest rate a little bit higher. So that's why it's really important to understand the balance between what the interest rate means and what the actual closing costs mean. You see, one way or the other, the lender is going to make up those closing costs. They're either going to charge them to you up front in the form of closing costs, or they're going to roll them into the loan. The lender's going to get their closing costs one way or the other. The question is, how is it going to be paid for? So the moral of the story is basically this next secret. And this next secret is that good lenders will answer your questions, but great lenders will explain everything to you so that you understand it. Let's face it, this is complicated stuff and everybody's situation is different. I've seen buyers, getting ready to close on a house. They go out and they buy a refrigerator the week before closing, and that purchase alone screws up the whole domino effect and they don't get the house. Bye-bye, no home. So really, when you think about it, it's really important to understand exactly what you're getting into, which is why you want to make sure you have a great lender, someone that you can actually talk to face to face. These lenders are giving you hundreds of thousands of dollars to buy a house. They're like giving you the money. So they want to make sure that you can pay this money back. They've got rules. These rules are not obvious. Common sense does not apply. And a lot of times they don't even make sense, but the rules are the rules. So it's really important to have a lender who can explain these rules to you so that you understand them, so that A, the transaction goes smooth, and B, to make sure that you're getting the best deal on your loan. All right, secret number 4, and I am shocked that this is a secret. This isn't a secret, but statistically speaking, there's a ton of people who don't know this, so I've got to get this off my chest. The number 4 secret is you do not need 20% down to buy a house. Phew, I said it. There it is. I mean, seriously, do you know there are 0% down loans? Really, 0%. I mean, those are special loans, you know, VA and USDA and stuff like that, but they exist. And there are 3% loans, just 3% down loans that apply to everybody. Conventional loans that are only 3% down. I can just imagine a couple sitting on the couch thinking to themselves, you know, I just don't know how we're ever going to be able to afford 20% down and buy our first home. Well, first of all, that's no way to think. And second of all, you don't need 20% down. We can do it with 3% down. And because of that secret, which I thought everyone knew, but it turns out they didn't, without knowing that secret, you would never have gone to the next step. And the next step is to actually talk to a lender to see about how much you can afford. So, secret number 5 is that you can actually afford a lot more than you think you can, generally. Now, I'll have to save the calculations for a whole nother video, but let's break it down like this. And this is very broadly and generally speaking. But if you can afford rent where you're renting, then you can probably afford a mortgage. Let me explain. You see, most rents are a little bit more than the mortgage on the place that you're renting, because investors, you know, the ones that you're paying rent to, the ones that own the house, they're investors. They're not going to buy a house and put a renter in there if the rent doesn't cover the mortgage. I mean, it would be weird to be an investor and lose money every single month. You wouldn't really be much of an investor, would you? So the reality is, if you can afford rent, let's just say you're renting a house, a standard 3-2 house, and you can afford the rent on it, you're probably in pretty good position to afford your monthly mortgage payment. Again, in another video, we'll talk about how to actually calculate how much you can afford in payment. But the gist is, you only need 3% down, and you can probably afford at least as much as you can pay right now in rent. So there you have it, 5 lender secrets that you need to know about. You see, this is a boring topic, so we need all the help we can get. Go ahead and smash that like button. Also, be sure to check out our other videos there and there. And then, of course, you can always subscribe by hitting right there, so you never miss out on any of the good stuff. Thanks, guys, for watching. We'll see you next time.